Hi, Kevin Wright here and back for another weekly property finance tip video. What's it about this week? Lease options. If you're into lease options, keep watching because I'm going to tell you why you cannot use a mortgage to exercise and complete the purchase of your lease option contract. So, lease options. This could be what you don't get taught on lease option courses. There's different types of lease options. There's a purchase lease option as well, but this is just for lease options. So the thing with lease options is that you're essentially deferring the purchase for some years into the future, typically 5 to 10 years time. And the reason you're doing that is because it doesn't work to buy it at today's value. And usually that's because there's not enough equity in the property to buy it now. So these are people that are too highly geared, and if you were to make money on it today, you'd have to buy it less than the mortgage value was actually worth. So the answer, and this is taught on lease option courses, the answer is to put a lease option in place, get some rental income on it, and give yourself the option, but of course not the obligation, to buy it at some point in the future. And typically you'd put 5 to 10 years as a time frame to give the property enough time so that the general market in that area increases. This might be the bit that you didn't get taught on your lease option course, possibly. So when it comes to actually exercising the lease option, and it now makes sense for you to complete the purchase, you're going to hit a problem because it's going to be virtually impossible for the mortgage lenders to give you a mortgage to actually buy this property. And I'm going to explain why. Now, a basic premise of mortgage lending is that it's an arm's length transaction between buyer and seller. And for the vast majority of property transactions, that's exactly what it is. Now, it means that there is no pre-existing relationship between the buyer and the seller. That's pretty much true in most cases. You know, the agent acts as a middleman. Estate agent would introduce the buyer to the seller, and these two people are previously unknown to each other in almost all circumstances. So there is no possibility from a mortgage lender's point of view of any dodgy dealing or collusion going on. It's just one person wants to sell their property and the other person wants to buy it. So that's an arm's length transaction. What they don't like is when it's the opposite, that there is a pre-existing relationship with buyer and seller, because now that brings into those into possibility that there is dodgy dealing or collusion, or buyer and seller are fixing up some sort of deal that the lender may or may not be aware of that could disadvantage the lender and threaten their security. So on non-arm's length transactions, mortgage lenders will decline to lend. Now, there's one clear exception for that, and that's maybe if you're selling, to a family member. So, if that would be an acceptable exclusion to that. If that's a big problem, how do you get around it? And I think it's often overlooked on lease option courses because it's so far in the future. It's 5 or 10 years down the line. There's no point focusing on that to a great degree. And this is a big issue, because if you want to complete on the lease option contract, how do you actually do it if you can't do a mortgage? Well, of course, you come back to unmortgageable properties, and if you watch any of my other videos, you'll see that there's usually two solutions to that. One is cash, the other is bridging finance. If you've got a big enough pile of cash in the bank, then just buy it cash and then put a mortgage on it. But if that's not you, then the only other option is to use bridging finance. We're going to talk about that a bit in a minute. Now, let's look at the difference between a mortgage lender's opinion when you're buying it to when you already own it. They're very interested in your relationship to the seller whilst the purchase is going on. That interest wanes dramatically once you already own the property. So once you own the property and you've bought it with cash or bridging finance, the lender now is no longer interested in the relationship you have with the seller. So I'm going to talk about the bridging aspect a bit here, because I'm guessing if you had hundreds of thousands of pounds sat in the bank, you're probably not going to be watching this video. Bridging lenders are quite happy to lend where there is a pre-existing link between buyer and seller. Why is that? Bridging lenders think in pretty much all aspects of underwriting counterintuitively to mortgage lenders. What mortgage lenders are really hung up about, bridgers couldn't care less on. So you got a pre-existing relationship with the seller, so what? Bridging lenders are very happy to lend to allow you to complete on an option contract. But it gets even better than that, because there's a type of bridge called a market value bridge. Now, this is really useful if you're exercising an option contract. Because several years typically would have passed, the value should have gone up. So let's say you struck a lease option agreement to buy a property at £100,000 a few years ago, when the property was worth less than that. Over the passage of time, the price has increased, and now, today, when you want to exercise the lease option and complete the purchase, it's gone up to 150. Now, a market value bridge will lend on the lower of the value or the asking price. Now, in this case, it'll be off market, because you wouldn't be going through an agent. It would be based on the 150,000 value. Now, if a bridger lends against 150,000 value, but you're only buying it at 100, that £50,000 is essentially your deposit, or the vast majority of your deposit. So you can actually complete the purchase of your lease option using a very small deposit. You know, another of my videos talks about shrinking the deposit. Well, this is a great way to exercise shrinking the deposits. If I got you worried at the beginning of the video by saying, hey, you can never use a mortgage to complete a lease option contract, now hopefully you're comforted by the fact that there is a solution, and a very workable solution, and one that we've brokered on a number of occasions. That's the message for this week. Don't stop doing lease options. There's nothing wrong with them, as long as you're happy with them and the seller's happy with them, but do understand that it's the right way to finance them that counts. So thanks for watching that video. Hope you found it interesting. If you did and you haven't done this yet, then subscribe, like, and feel free to leave a comment below, because I'm always going to pick up comments and answer them. Also below, there's a number of other links that, if you found this video interesting, you may also find interesting. So just have a look, see what you think.